Good afternoon, everyone. Welcome to the commodities update video. And today we'll be talking about natural gas, gold, and silver. We'll be looking at the support and resistance levels, as well as what's the most likely scenario that the price action they will be heading into. And if you guys are looking for stock market videos on QQQ and S&P 500, as well as the 7 mega cap tech stocks, check out the next video that's coming up. And I'll be uploading probably in about 30 minutes, as I will be doing that video right after this one. So right now on natural gas, yesterday we talked about where we want to see us bounce back above 2.62, and we did. So this morning we gapped up and essentially had a double top pretty much on close to yesterday's high. So the most recent key resistance level for me would be yesterday's high, and that's the level that we're looking at for short-term traders. And for you longer-term traders, we will be following the daily trend. So right now we want to see the daily trend change back to the bulls. So after this daily downtrend confirming right here on that August 15th, there was a lot of follow through from the bears. So you can see all of this downtrend. But now after bouncing off of this strong support zone, this maroon looking widening wedge, support zone, support, and bounce off of this again, we are making a big enough bounce now where we have a lot of room now for the bulls to work with to confirm a daily uptrend. So that's what I want to see next from the bulls. And of course, this is the resistance for that broadening wedge. And we're nowhere near it at the moment, so we don't have to worry about that. To testing it at the moment. And so what a daily trend change means is we need, on a daily time frame, we need to shape up a higher low. So from A, this is the bottom of the move, the B, the top of the move. This is just one move. This is not a daily uptrend yet. Although we did break above the prior pivot of the downtrend. So now we are going from a daily downtrend back to a daily neutral trend. So to form a daily uptrend now, from A to B, now on the next pullback, the low of that candle needs to be set higher than this low, anywhere within this entire range. So that's why the size of the bounce matters. It means giving bulls more room to work with. Even if we get a big pullback, as we get a 5% pullback, we still have room. We're still going to be higher than the prior low. And that's how we bounce right there. That's the pivot that's going to be set. And that's the level that all the bulls will want to be holding. And then we got to break above the recent highs. That will confirm a daily uptrend. So as of now, we don't have the pivot set or anything yet because this A to B move is not over yet, right? We don't know if this is the top or not. So we zoom in, give us more clues to see if that's going to be the top or not. At this given moment, we can't say that yet because this move is still technically going until we see signs of the move where it's topping out, where we see some hourly downtrends confirming. Then we may say this A to B move is potentially topping out, and we may start to get our daily consolidation going. So as of now, still no daily consolidation clues shaping up yet. So we can say until bulls show us that they are topping out, we will wait and see where they want to stop. But currently, we are having a double top here, which is also a resistance at 2.7. You can see over here, rejection of 2.7, 2.7, over here as well, over here as well. So that's going to be a key resistance zone for bulls to try to get over. So this may be actually the top where, let's say tomorrow we pull back, right, and form that higher low pivot for the daily trend change. But as of now, no signs of that yet because we haven't confirmed any hourly downtrends yet around this level. If we do break above this 2.7, then I'm looking back down at this downtrending maroon line, which was acting as resistance. Resistance bounce off the support as here. So now when we come up to it, it's going to act as resistance as well. And if we do get over that, I'm looking back at this level right here. That's 2.75 zone as well. There's a bunch of resistance and supports. We'll see. And We could possibly have a straight shot up because that's the characteristics of natural gas. You can see even just this move. We shot up, let's say here, 22%, right? Without a trend change. So this A to B move down here from the bottom of this move, A to B move, didn't even change the daily trend change. It was just a straight shot up move, right? And it tried over here. We had a big pullback and bounce and needed to get over here back above. That was the pivot set, and we didn't. So we formed a daily downtrend instead. But so we'll see how Natgas decides this time if it wants a trend change or not. Because the reason for trend changes is because it sets a support for the zone. So if it's a straight shot up, it makes it a lot easier for it to be a straight shot down as well. But if you have levels of support on the way up where it forms pivots, right, and support zones as it goes up, then it's a lot harder for it to go straight shot down because there's a lot of support zones built along the way. It's like building a foundation where it's as you go up and making the price action a lot more stable and stronger versus like a 22% straight shot up into resistance, especially when it's a 22% straight shot up to resistance, to the uptrending resistance over here. Obviously, it's going to pull back. That's why we get such a huge pullback in one day, the next day. And there's to back over. So right now, let's see when it starts topping out. I'll definitely let you guys know. But as of now, no signs of that yet. And the most ideal scenario could be break. And I want to see some form of trend change for the on a daily time frame for us to form more supports along the way. See, maybe this time we could actually break $3, but as of now, still just chopping in this big zone. And you guys don't always talk about the monthly. We're still in a bear flag on the monthly time frame. I'll just do it one more time for you guys, and for those of you new here. So bear flags are, we measure from the top of the move to the bottom of the move. And if the opposing move, so the bounce, does not bounce over 0.382 on the Fibonacci line, it means it's still in a bear flag territory. So you can see how much of this drop was. And pretty much we only bounced this puny bit. We're not even close to 23% yet. So we probably bounced only like 20%. And you can see how significant that bounces already is from the bottom. That's a 52% bounce, right? So on a monthly, if you're holding for a long term, you still see this is a monthly bear flag as long as we don't bounce above the 0.382 line. And for bear flag to confirm, we have to break its prior low, which is right here, close to the $1.96. In my personal opinion, I don't think we're going to break to that low because if you scroll back historically, we really don't go down that much more. This is from 1990, right? 1990 all the way to now on the monthly chart. You can see that we never really go below that $1.96 or $2 for that long, really. Ever since, these are pretty much the actions where when we started, so I don't really count these as much. But ever since we got it back, we are above $2. You can see that we've only gone down below it here and here, roughly, and not even for that long. So my personal opinion is I don't think we're going to go head down there, but even if we do, we probably won't stay down there for that long. But we still got to know that there's a monthly bear flag there where it can potentially bounce up and then tries to form that bear flag, comes down, but it doesn't confirm the bear flag, and then we bounce back up, right? So we're gonna have an idea of it, a bigger picture in the back of our head that we are still in a monthly bear flag, while looking at the shorter term time frame as we play shorter term plays, such as you swing for a couple weeks or a couple days. These kind of plays we look for the shorter term time frame. All right, this real quick. So yeah, no signs of stopping yet at the moment. and tomorrow we'll look at it again. We'll zoom in to the hourly, see if it can give us any signs of it topping out tomorrow or not, or is it going to continue, and we'll go from there. All right, let's take a look at gold by UNG. UNG, same thing, a little bit weaker than Natgas. I'm surprised Natgas was up 3.5%. UNG is barely even green, but it did pull back to support, bounce off of it. So that's a good sign. And I want to see some offense going here. So 2.79 is the support that it bounced off of. And I want to see bulls, show up some offense going on. Pretty much just playing defense the whole day, going completely sideways in the support zone. So not much going on today for UNG. So although it did V-shape with Natgas at the end of the day, over here, same thing, similar sideways bounce into the end of the day. So it's a good sign for the bulls, but nothing too crazy, just defense. So I want to see, let's see here. I definitely want to see us break above today's top. There's like a quadruple resistance there. And then we're coming back up to this 7.16 zone. So let's see if we can do that. Same thing. I want to see a trend change, but as of now, no signs of that yet. So you guys know how I talk about in Natgas, where I want to see a higher low being set. So pretty much UNG is showing that already. So this is the A move to the B move. That's one initial move. Now on this pullback, you can see this low, right? You can see this low, candle's low is higher than this low. So now that's going to be the pivot, the bulls. And when we break above this Monday's high, 7.18, that's a daily uptrend confirmed. So at the moment, we don't have that yet, but we can say, 1 second. When we say this is the pivot that's being set, so we zoom in, and I'm going to say not yet. As long as if we bounce back above this quadruple top and form an hourly uptrend, then I'm going to say that is the pivot that's set, and that we hold that level. And if we break that level, then yeah, that's a red flag. So as of now, good sign that we bounce here. And let's just say potentially this is the pivot set, and we can potentially change the trend back to natural gas's favor. And because it's been a while, natural gas even formed a daily uptrend. This move is just one straight move, just like natural gas with no trend change. And the last time I see one is excuse me. So the last time I see one is right here. So that's been a while, since June. And yeah, maybe we'll get one here again. So we'll see. And boil it just 2x long side for leverage. If you guys like playing leverage, and KOLD is the 2x short side for leverage. All right, let's take a look at gold. And gold, we are breakout today. So we've been looking at the dollar, the US dollar, for correlations with gold and silver and all the metals. And currently, we are seeing a weakness in dollar and a breakout in the metals. So yesterday we talked about where it had a daily uptrend formed right there. You can see this is the pivot, higher low, lower than this, higher than this low. And we broke above it right there, but with lacking a little bit of follow through. And then today we see more dollar weakness, and it was a boom, got a huge breakout into 1942. So that's pretty much, we just ran out of time. Otherwise, I would say probably would have head to 1942. And because we pretty much closed at the high of his day, meaning it wants to run more and out of time. So the next level I'm looking at is pretty much 1942. And we'll see if the dollar continues to be weak. If it does, then we're probably going to come up here and test this black looking line, because it was acting as strong support multiple times. And so when we come up to it, it's going to act as a resistance. So that'll probably be around 1961 when we do come up to it. Let's take a look at, does start to feel, let's see if there's a new pattern here. Okay, so it's a channel. So it's a parallel channel. And we are pretty much there at the resistance. It'll go and coincide with 1942. Exactly. So 1942, sideways resistance, as well as this downtrending mirror looking line. So you can adjust this a little bit. Let me see here. Yeah, more like that. But some people draw in the wicks, some people don't, so it doesn't really matter. But the diagonal lines are more so visual guides. The horizontal ones are more definite because diagonal ones, anybody can just adjust a little bit. It'll be different. Horizontal ones are usually levels where everyone is drawing the same. And that's essentially the psychology of these lines because everyone draws at the same area. Then supply and demand is going to be in that area, which causes the lines to kind of self-fulfill itself. So that's pretty much what indicators do as well, because everybody looks at indicators the same way and usually just fulfills how they work and brings the supply and demand in those particular areas. For example, like RSI, oversold, right? It'll bring demand when it's oversold. And if it's overbought, it usually brings supply. So, all right, back to gold. So let's take a look at dollar to see if we can get more weakness on the dollar. And this, I would say, is the first notable weakness on the dollar. And yeah, we'll see if bears follow through more tomorrow because this could potentially be a head and shoulders on the daily chart after this pullback. So we get a slight bounce and then we reject it from there again. It will form a daily downtrend. That's what the head and shoulders is, going from an uptrend into a downtrend. You see the left shoulder here and the head, and potentially we'll see if we get a right shoulder on dollar. So if that happens and it confirms, then metals would continue to bounce more. So we'll get say if dollar bounces tomorrow, we get a little bit of a pullback on gold, and then once this confirms, get another bounce, right? So now the daily uptrend is still intact for the dollar though. So even though this is a big enough pullback, pivot was set right here. So we didn't break below that pivot. So that means the daily uptrend is still intact, and we don't want to be blindly shorting it because if the uptrend is still intact, this could just easily bounce tomorrow, right? So we'll see if when it retests, is going to reject it or not. If it does rejecting, then it could be a potential short. All right, take a look at silver. Same thing. Silver confirmed its daily uptrend today. This is one initial move. Pivot was set right there as the higher low, and we broke above this quadruple top today into parallel downtrending resistance, which is where gold is testing the same spot. Downtrending resistance, and silver also downtrending resistance. But silver is a lot stronger. It's been bouncing before gold because of the relative strength. And let's say tomorrow, right, we get that little pullback on the bounce on the dollar, and this would perfectly pull back a little bit, as well as gold perfectly pull back a little bit. And then if that head and shoulder forms, guess what? We get a breakout on both gold and silver. So the metal bulls, that's what I would be watching to see if that head and shoulder does form or not, and potentially set your stop losses around these areas, around these resistance. All right. So I got it for you guys on commodities. And if you guys want to check out the stock market video, I'm going to go film that right now. And I'll be uploading it in probably 30 minutes or maybe an hour, depending on how long I film it. And all right, have a great rest of you guys' day. And I will see you guys tomorrow. And if you guys learn anything, and feel free to subscribe if you guys made it this far. And all the likes and shares, I appreciate it. And if you guys got any questions, feel free to comment below. And I'll see you guys tomorrow.